Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Friday, August 1, the EURUSD pair reversed near the 161% Fibonacci corrective level at 1.1416, turning in favor of the euro and surging sharply. The consolidation above the 100% Fibonacci level at 1.1558 opens the possibility for continued growth, but for now the overall trend remains bearish. Therefore, a more likely scenario is consolidation below the 1558, which would signal a potential return to the downward movement toward 1.1416. The wave structure on the hourly chart remains simple and clear. The most recent completed upward wave broke the previous high, while the latest downward wave broke the previous low. As such, the trend can still be considered bearish, although it has recently been shifting frequently due to the news background. Donald Trump managed to sign several favorable trade deals, which gave strength to the bears, as did Jerome Powell's statements following the latest Fed meeting. However, the latest labor market data and the changing outlook for Fed monetary policy have now shifted momentum to the bulls. On the 4-hour chart, the pair reversed in favor of the euro and consolidated above the 127% corrective level at 1495. This means the upward movement may continue toward the 1.1680 level. It doesn't guarantee the formation of a long-term bearish trend. In fact, the most recent news flow suggests another decline in the US dollar is more likely. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. On the weekly chart, the British pound must accomplish a very important task: to consolidate below the MACD line, its blue line on the graphic. Such consolidation would finally confirm the medium and long-term bearish scenario for the British currency. For a full confirmation, the new week should close with a black, bearish candlestick. The signal line of Marlin oscillator is attempting to cross into the downtrend territory. If it succeeds, the situation will gain confirmation and additional technical support. Today is a public day in the UK, so the main task for today and tomorrow is to keep the price within the 1.3206, 3265 range. However, if the price rises above 1.3369 daily chart, it may consolidate above the MACD line on the weekly chart, which would mean the last week's candle merely pierced the line, a false move. In that case, we could see the price rise toward 1.3834. This week is a battleground for the British pound, and Thursday will be the key day with the Bank of England's decision on monetary policy. On the 4-hour chart, the rising Marlin oscillator is pushing the price to attempt an attack on the MACD line near 1.3309 mark, which coincides with Friday's high. Consolidation above these levels would put us in a wait-and-see mode until the BOE's meeting.
That's all for today. See you online soon.